Welcome back. Anand Rathi's 745 crore IPO opens for subscription today. Pradeep Gupta, Chairman, Managing Director, and Anand Rathi is now here with us in the studio. And today's conversation, we will focus on one, how is Anand Rathi's share navigating all the regulatory risks? Two, what are the growth and expansion plans ahead? And three, will FY26 be better than FY25? And if yes, by how much? Thank you very much for joining in. Now, over FY23 to FY25, you've clocked in a revenue growth of about 34%. But we've seen SEBI clamping down on F&O. There is a possible discontinuation or weekly expiry, which can hurt volume. So in that context, can you do better than your historical growth rates of 34% on the top line?
First of all, good morning, Rima, and to all the viewers of CNBC. Yes, I think so far...
Please.
Okay.
Yeah, go ahead.
So far, business is concerned. I think you have to literally look at it, how the business model is being created. And we are very confident that this kind of a growth is going to be persistent and stay with the company. And that's the reason, we are trying to see a different way or innovative way how it is to be done. Typically, what we are trying to see, as we all know, pure broking is something which is directly correlated, and there are lots of, involvement of market volatility. And the moment market volatile, your broking revenues also start getting volatile. So to aloof yourself from that, you have to create a business model where probably how you can, create a model which can give you a sustainable long-term growth and a predictable growth. And that's where, if you really look at Anand Rathi share in stockbroking, which is coming for public, largely having a two kind of a revenue stream, broking and non-broking. And within non-broking, if you really look at it, distribution is one part and margin trading facility is another part. And these two businesses, which is in non-broking side, is largely annuity-driven businesses. So the moment you start looking at AUM, you start getting certain amount of annuity revenue.
So could you, Mr. Gupta, break that down? How much is broking? How much is...
Yeah. So in Anand Rathi share and stockbroking, if you really look at it, right now, broking 60%, non-broking 40%. And that's the whole endeavor, is how we can constantly...
And what have been growth rates in both these, broking and non-broking?
So if you really see in broking, about 20 to 25%, and non-broking, about 35 to 40% kind of a growth is there. And the whole endeavor of this company and the people, management, everything is working towards it, that how we bring this ratio to 50-50. The moment we reach 50% kind of a revenue ratio, I think you are going to be less susceptible to the market volatility on this company, and that's what we are trying to
How
achieve.
soon do you think it will take you all?
My own perception and guess is, I think in next 2 to 3 years, we'll be able to achieve.
You said 60-40.
It's 60-40. 2 years back, if you really say it was 65-35, and we are trying to achieve and gradually working towards.
On the broking side, will revenues, the growth decelerate? Let me put it another way.
No, not really. It is going to be constantly grow at the same pace, point number one. And point number two, if you really again look at our broking model vis-a-vis any other companies, and as you rightly pointed out, the way regulator is looking at derivative businesses, there is another component in broking. Broking, cash market and derivative market. Cash market, pure cash plus cash trading. Derivative market is, commodity, currency, and future and option. Now, over there also, if you really look at Anand Rathi share and stockbroking, it's 50-50. Okay. If you compare with any other broking houses or most of these broking houses, their probably this ratio might be tilted towards...
Cash and derivative is 50-50 within broking.
Cash and derivative is 50-50, and within derivative, commodity, currency, and F&O, all three put together. So our dependency on those future market businesses are very, very less. And this whole structure is being not came by default, it's being by design, by strategy which we have set, because we are always advocating customers who are looking from a long-term investments, who are looking from a staying and creating over a period of time, certain amount of investable surplus and constantly generating certain amount of return. And that's the reason, if you really see this 50-50 is maintained, our focus is to our cash market delivery. And if you really look at our yields, are constant from last almost 4 to 5 years, which is 0.09 paisa, which is 0.009%. I think that's the yield, kind of yield is being static in broking businesses. And as I said, broking is about 60% in overall total revenue business.
All right. Hi, Mr. Gupta, and good to have you on the show. You know, in the last issue that the Anand Rathi came out with, it generated a lot of wealth. So some of your investors will be hoping that you replicate that performance. That said, there are some challenges, right, in the near term at least. So the non-broking component would be the interest on the MTF book as well, which has grown. It was 50 crores a few years ago. Now it is at more than 100 crores or thereabouts. But the regulator is also looking at this part of the business. You know, they want to, make it, more friendlier for users. Do you see that as a bit of a headwind? Because that clearly has been the outperforming part of your business if I look at your revenue construct.
See, fortunately, Nigel, it's a very good question. I think one has to look at it, how you are playing your cards in terms of providing funding side. And if you really look at it, margin trading funding is well regulated. Every day, all the positions are being controlled and are available at stock exchange level also. So if you really look at our margin trading funding, this is largely given to those customers who are looking to increase their ROI.
Okay.
Right. So that means, what that means is our internal controls and systems are that we are not allowing over leveraging any kind of a customer. So there are checks and balances being created. If you really glance through our book, almost 75% book is below 1 crore customers, right? And there are hardly or very few customers who are getting above 1 crore kind of a funding.
Yeah.
And what we are trying to see, whosoever wants to leverage their position in a systematic manner, trying to generate and increase their ROI, are being given this category group. The second instance, I think if from a regulator perspective, about 1,900 stocks are available for our margin trading funding book. Out of that, what we have done, internal systems, internal control says not 1,900, but only 900 scripts are going to be available with a different kind of a margining system. Right. And if you really glance through our book, about 75% book stays in Nifty 500 stock. So it's well spread, well controlled, and we see that there is no...
So short point, you believe the MTF book, will continue, the interest on that will continue to generate a good amount of revenue for you, given the checks, the balances, everything that you have done. Got it. All right. Now, what about, I've looked at the NSE data in terms of market share. You're still relatively small, if you compare it with the bigger names. Do you have a target out here, that you want to go up? Because obviously you're growing the business, a lot of focus out there. And now you'll have shareholders that will keep asking you this question. So is there a target out there?
I mean, it's again good question. I think we as a strategy have not taken that route that we have to constantly look at market share and constantly look at the turnovers.
Yeah.
There are two kind of different businesses. Companies who are literally looking at turnover side and constantly trying to expand their market share in turnover. We are not going towards that. What we are trying to focus is on an individual investor whose investable surplus can be addressed through us, and we constantly trying to increase with that same investors, how the AUM of that particular investor can grow along with us, so that investor can be beneficial, and as well as we also can start getting our revenue stream over a period of time. As a result, if you really see, our 30-year plus kind of investors are almost 85%. Okay. If you really look at stickiness of our customers, 5-year plus is 50% and 3-year plus is about 60%. And similarly, to service these people, our RM fraternity, managerial plus kind of a people with us, again, fortunately, it's the same ratio, but 5-year plus is about 50%, 3-year plus about 60%. So that's how the whole component is being created, whole service standard is being created to service those customers.
Mr. Gupta, just one last point on MTF. What is the available amount that you can fund?
So from a regulator side, you can fund, 50% of your net worth and 5% of total overall net worth, you can go and probably provide it. Right. But for that, you need liquidity.
Right. No, but from an individual perspective, if I want to take a position worth 100 rupees, how much will...
Based on the margin. Typically, 30% to 35% kind of a margining is there. So if you are providing security or a margin of about 30-35%, you can go to any extent. So it all depends on what kind of a ratio you are following, what kind of a rules and
For every
regulations.
stock, it is different as well. I think for NBFCs, there is a limit prescribed by the RBI, right? That's 50%.
So
I mean, you can't-
NBFC is completely different.
Separate.
They are not on MTF side.
correct.
They are on a LS side.
Correct.
So they are providing LS, and over there they have a 50% kind of a margin.
Yeah. Mr. Gupta, we wish you all the best of luck. Thank you very much for joining us.
Thank you.
Really appreciate it, and
Thank you.
good luck. So
Thank
there
you.
is
Thanks a lot.
Anand Rathi with the IPO on the broking side, but it's not just broking, as Mr. Gupta told us. It's broking, non-broking, which is of course distribution, and the MTF book as well. More annuity, more stable, and it's about 40%, and in the next couple of years, perhaps goes up to about 50% each. Well, I think, well, that's goodbye, Mr. Gupta.